Hey everyone, this is Mike Kramer at Mott Capital with a weekly check-in. Today is Monday, September 25th. It's around 6:30 New York time. U.S. markets are closed. So I thought we'd start today just by taking a look at what's happening in rates because those have broken out since last week's Fed meeting, and you can see that the 10-year has moved from around 435 up to 452 as of right now. So just barely eclipsing the highs from the other day. Again, trading over the 450 mark, which is pretty significant. The 30 is also up pretty sharply today, up 13 basis points, follows a big move last week as well, up 13 basis points. And so we've gone basically from 445 or so to around 465, so about 20 basis points in just a couple of days. And so the moves have been rather staggering. And you're seeing the big moves in the back of the curve at this point. You have seen the 2-year move up a little bit, but certainly not as much. And what we're seeing is the 10 and the 2 really start to re-steepen with the 10-year rising to the 2. And, what's interesting is really where, the 10-year is going to go relative to the 2. And it doesn't seem like, if the Fed is true to its word and, its dot plot at least, if we're going to see a December Fed fund future, for next year, probably around 510-ish up here, then it seems hard to imagine that you're going to see the 2-year really slip materially from its current level, which would suggest that the 10-year is likely to continue to rise to the 2-year, and that this curve is going to continue to re-steepen. And if we just look at it from a technical perspective, we can see that there was certainly a consolidation pattern in here, and it looks like we're now continuing that move higher off of these levels. And if we were just merely to extend this move from this move, it would take us back to basically where we were in, call it early March and mid-May at around negative 35 to negative 40 basis points. Currently, we're at negative 60. And so you could imagine that we could add an additional 20 to 25 basis points onto the 10-year from here, and it certainly it wouldn't put us anywhere we haven't been in the recent past, and certainly if we're going to put 25 basis points on the 10, you could assume we're going to put 25 or 30 basis points on the 30. We look at a chart of the euro, we can see that the euro has broken some key support levels here, call it 106 or so, and now we're trading 105.940. Really, the next big level of support comes around this 105.25 area, which would really be a very, very big level because you can see if that level were to snap, there would be significant risk to the euro trading back down towards parity. Now, again, the euro's been in this sort of oversold condition now for some time, just basically trading right along the lower Bollinger Band. It's been flirting with the 30 level on the RSI now for some time, but ultimately speaking, tough to say we're really oversold at this point when we just continue to trade along these bands, and it looks like the next level of consolidation doesn't come until around this 105.25 region. When we look at the dollar versus the pound just keeps melting here. And, the thing we're going to want to watch for is if there's like a bump and run pattern forming on the pound. It looks like there may be. The pound is oversold now on the RSI, and the pound is certainly touching the lower Bollinger Band. And we can certainly see that the pound is sitting up around support level at 120, 190, 120, 180. So this is also a pretty big level for the pound. I wouldn't be surprised to see it consolidate a little bit around this level to move it out of oversold conditions. But again, it looks to me like, given the fact that the BOE seemed to back off raising rates, given the sense that it looks like England could be heading towards stagflation, there could be some further weakness in the pound after any sort of period of consolidation. Now, if we turn to equities and look at the DAX, we can see that the DAX, had that big sharp move higher following the ECB meeting. It turned out to be a false move, which we had speculated at the time. we saw the DAX now really break the lower bound, coming down and breaking below this level. This was important. We filled the gap basically here back from March 28th, which was important because we came down to it, filled the gap, and for now that's held. So what I would be looking for on the DAX at this moment in time would be to see if there's a retest of this level at 15,500. And clearly, if there is a retest, what happens at that level? If we get there and we hit it and we fail and we start moving back down again, probably a good indication that this 15,300 region is going to go. And obviously, if we were to open weaker tomorrow or open weaker in the days to come and gap below this 15,300 level, I think that really opens the door to significantly lower prices in the DAX, probably into the 14.8s, at least over the near term. When we flip over to U.S. equities and we look at the Dow, it's sort of a similar look for the Dow where it broke this big uptrend, which was a pretty significant uptrend because this formed off of the March 15th lows. We can see that, we firmly are well below this 34,600 resistance zone. We've dipped below this 34,200 level. We did fill a gap right here at 33,950, and we have found some support in this 33,750 area. Again, for the Dow, it looks like, there's a retest of 34,200 possible. That certainly seems possible. We'd want to see how it acted once it got there. Again, if you power through that, you're talking about the potential to refill a gap at 34,450. But again, a failure is probably a pretty negative sign that this low is going to be taken out and that we're probably going to test this 33,580 level, if not even refill a gap down here at 33,000 almost even. When we look at the NDX, it's a similar look here. We broke a big uptrend off of the August 18th low. You can see we've come down near this lower level here at 14,600. This is really the big line in the sand right here, 14,600, 14,580. Because once this level breaks, if it breaks, there's potential here that we go all the way back to 13,006, at least in the very immediate term. Likewise, you hold this level, you take out these highs early tomorrow, there's a chance you get a gap fill up here to 14,970 or so. And finally, when we move over to the S&P, it's a similar, setup again. Here's this trend line off the August 18th low. Clearly, there's a diamond pattern with the potential of a head and shoulders. If we just do an ABC here, to get wave A equal to wave C, you got to see the S&P fall to around 4270, which you can see is a support level as well. But besides that, again, you're looking at a scenario where we were basically trading around resistance all day at 43.30. We're slightly below the diamond bottom. And so, again, you're looking at resistance here at 43.50 and then 43.75. So if you start getting above this 43.50 level, it seems possible that you could start working and filling gaps back up to 4,400. Likewise, tomorrow, if we take out this low early at 4,300, that sets up the potential for that move down to this 4230 region and potentially back even into the low 4100s in the days and weeks to come. So I think we're pretty much at a really important spot across markets, especially when it comes to U.S. equities and Germany. And not that I want to get into Asia too much, but if you take a look at what's happening in Taiwan, you can see also a very similar big level of support. If you look at the Kospi, for example, here's also a big level of support. And if you look at Hong Kong, again, here's your big level of support in this region. So it just seems like markets globally are at an inflection point where if the bulls are going to take the ball and they're going to save things at this point, they need to do it pretty much ASAP. And if the bears are going to take control here, they have an opportunity to do that, certainly. And so that's where we are. Thanks for watching, and we'll see you soon. Bye.